Okay, well, hello everybody. Good to see you again. Today, what we're going to be doing is we're going to do the financial statements that are required off of this transaction analysis demo that we recently did. And I have up on the screen a summary of the transaction analysis that we did. And as you can see, we had cash ending with 13.9 at the bottom of the screen. Accounts receivable 3,000, office supplies 900, equipment 3,000. We then see our liabilities totaling 200. Our capital ended up with 15,000, drawing 600, revenue 10,000, and expenses 3,800. And when we were doing that transaction analysis, we kept determining whether or not we were in balance all the way through the document. So every time we updated our sheet, it was on the yellow row, which I call the balance row. And the bottom line was we had a little calculator that I had created, and we were able to verify all the way through that we were in balance. We also verified at the very end that we were in balance. On top of that, we were also asked whether or not this company ended up with a net income or a net loss. And as you can see at the bottom with the blue highlights, this company ended up with a $6,200 net income. And if you recall, the way you calculate net income is you look at your revenue total and you look at your expense total. Our revenues totaled $10,000. Our expenses totaled $3,800. 10,000 minus 3,800 result 6,200. Since that 6,200 is positive, we have a net income. If that subtraction had yielded a negative answer, then we would have had a net loss. So when your revenues are greater than your expenses, you end up with a net income. But when your revenues are less than your expenses, you end up with a net loss. Okay, so you want net income, you do not want net loss. All right, so what we need to do now is take these answers and let's create formal financial statements, one of which is an income statement. And in this income statement, you're going to come up with the same results that we just got a few minutes ago with the net income. So the income statement is an actual document that its main job is to provide the viewer of that statement whether or not the company had a net income or net loss. The income statement's main job is to determine the company's profitability. Excuse me. Okay, so a quick review. Remember that cash, accounts receivable, office supplies, and equipment are considered assets. Why are they assets? Because the company owns this stuff. So anything that is owned by the company is considered to be an asset. A liability represents the debts of the company. And in this case, they only had one liability, and that was accounts payable. Remember that assets can go up and down, and so can your debts. But your four equity accounts, capital, drawing, revenue, and expenses, if you recall last time we were together, I referred to these four as my shopping cart accounts because these accounts always go up. So you're going to see every time you put a number underneath one of these last four columns, the total will just get larger and larger as you go down the page. So a great example is look at the expenses. Notice how the expenses went from 600, they then went up to 1,300, they went up to 2,500, went up to 3,800. So you can see that the expenses just continue to climb. If I had had multiple revenue transactions, multiple drawing transactions, and multiple capital transactions, you would have seen the exact same effect. Those four columns just get larger and larger as they go down the page. Whereas the assets, they can go up, they can go down, and the liabilities, they too can go up and they can go down. In addition, what I did over to the right part of our screen, you can see under column U and V, I repeated all of the results that we got from the document so that we can maximize our viewing area. So I'm just going to move my screen over a little bit so all we see are the things that we need. So in the orange box, you see all of the accounts summarized and their balances. And then what we want to do now is create the 3 financial statements that are associated with them. I've already created the headings for these 3 financial statements. You'll notice that the company name always goes first. The name of the document always goes second. And then you put the date on the 3rd line of the heading. If you notice, the income statement and the statement of owner's equity have a very long date for the month ended April 30th, 2016. But you don't see that long date under the balance sheet. You just see the date. So the difference between, when you use the long date versus the short date, well, the income statement and the statement of owner's equity are kind of telling a story of what happened during the month. So it gives you basically the results of what took place during the month. However, the balance sheet just tells you, here are your answers on April 30th. Here are my final balances on April 30th. It would be like you going to the ATM machine and just putting in your number and wanting to know what your current balance is in your account. You don't want to know what you started with, what happened. All you want to know is the current balance. And that's what the balance sheet does. It just gives you the current balance. So just a quick summary. The income statement determines company profitability. The statement of owner's equity determines the company's net worth. And the balance sheet basically shows all of the balances in the accounting equation, and that your accounting equation is actually in balance at a specific date. So the balance sheet shows assets equaling your liabilities and your owner's equity. So just a quick little blurb here I'll put under each of these. So the goal of the income statement is to determine profitability. The goal of the statement of owner's equity is to determine the company net worth. And we can also put in here and determine the company's ending capital. And then the balance sheet, its main job is really the accounting equation. So assets equals liabilities plus owner's equity, which was that first document that we worked on in the last broadcast. All right, so let's go ahead and do these financial statements. Okay, so here goes. Let me just clean up this little area down here, and then we'll be ready to rock and roll. All right, so I'm going to color code these documents here, so it's just a little bit easier to follow as we go through. I'll make the first one yellow. I'll make the second one, let's make it green, and let's make the balance sheet blue. And I'll show you how this will actually come in handy as we go through this process. So, as we just talked about at the beginning, the way you determine whether or not you have a profit or not is to figure out what are your revenues and what are your expenses. So if you look at the little orange box that we have over to the left, for simplicity purposes, think of the word revenue as your clue to a revenue account, and think of the word expense as your clue to an expense account. So basically we have one revenue account, we have a variety of different expense accounts. So simplicity speaking, we're just looking at the revenues and the expenses only. So when we start off, we're going to put the heading revenue in our income statement document. And now let's indent the name of our revenue account, service revenue. I want you to look at column 1 as kind of like an itemizing column, or if you have more than one of a particular category, we'll use that column 1. If not, we'll put our answer directly into column 2. So this service revenue that we have, since we only have the one revenue, I'm going to put it directly in column 2. But let's just pretend my particular business earned money 2 different ways. So not only did we earn money by providing services, but we also rent out some space in our store, let's say. So we would have service revenue and rent revenue. If that were the case, I would list the amounts in column 1. Service revenue, the amount $10,000 in column 1. Rent revenue, let's pretend that amount is $1,000. And then I would need a line that said total revenue, and that total revenue of $11,000 would appear in column 2. But because I only have one in this case, the way we did it is the proper way. Then let's move on to the next category, expenses. Now in this case, I do have more than one. So I'm going to list the dollar amounts in column 1 because column 1 is for subtotaling. It's for itemizing. It's for when you have more than one. So I'm going to list here rent expense, the amount $600. The next one, advertising expense, the amount $700. And the last one, salaries expense, for $2,500. So basically, I'm only putting under expenses things that end in expense. Keep it that simple for yourself. Don't try to put other stuff in there. Yes, all the stuff that's in that orange box is important, but the only thing the income statement wants to analyze are the revenues and expenses only. Okay? So now that I have more than one expense, I listed them in column 1. So now what I want to do is add them up, and I'm going to put the total in column 2. So the total of all those expenses add up to $3,800. I need to label that $3,800, however. So a good name for it would be, what do you think? If this is a total of our expenses, how about total expenses? Okay, so now what I want to do is subtract that $3,800 from my $10,000. And when I do that, the result is $6,200. And now our decision is this a net income or is this a net loss? Well, because our revenue of $10,000 is greater than our expense of $3,800, this is a good thing. This is a good month. And if this is the company's first month, my goodness, what a great month they had coming right out of the chute. So this is a net income. And we're going to double underline our final answer. And that is very customary in accounting to double underline your final answer. Remember, the double underline goes underneath that final answer. So let's give this a little bit more of a red carpet treatment. I'm going to go in here and I'm going to click on the comma, and then I'm going to decrease the decimal so I don't want any cents in the way. So now all my numbers are lining up, but let's give the 10,000 a dollar sign. Let's give the 600 a dollar sign. And let's give the 6,200 a dollar sign. So the rule of thumb is first number in each column gets a dollar sign and final answer gets a dollar sign. If you dollar signed everything, it would be incorrect. If you didn't dollar sign anything, it would be incorrect. So what you want to do is you want to follow the procedure that I just showed you here. First number in each column gets a dollar sign, final answer gets a dollar sign. Okay, income statement is done. The next document we want to do is the statement of owner's equity. This document, if you remember from the bottom here, I said the point of the statement of owner's equity is to determine the company's net worth. And by doing that, you are figuring out the ending capital. So that capital of $15,000 that we had in the orange box, that capital basically is our beginning capital from this statement's point of view. We want to know if that 15,000 has grown or shrunk during the month. So we're going to start off by putting in the owner's name. So Spengel, comma, capital. And the beginning of the month date was April 1st. So let's just put it in like this, 4/1/16. And you know what? We're not even going to use this first column. We're going to use the simplified approach to doing a statement of owner's equity. And we're just going to ignore column 1 completely, and we're going to enter everything in column 2. So our beginning capital, if you recall, was $15,000. And because that's the first number in the column, let's give it a $sign. The next thing we want to do is we want to add in our result from the income statement. So I'm going to color code this one row in yellow to show you that I'm getting it from the yellow document. So what I want to do now is I want to add in my net income. I want to add in my answer from the previous document. So the answer from the yellow one gets dropped into the green one. The answer from this green one will get dropped into the blue one. So it always follows this order. Your answer from the income statement goes into the statement of owner's equity. Your answer from the statement of owner's equity goes into the balance sheet. Do I need the word add? No. You can leave it out, but you know what? Might be a good idea to put it in so you don't forget what to do. So I'm going to copy in the 6,200 that I just calculated up top, and now I want to add my results. So when I do that, I'm now up to 21.2. In this one column design, we don't really have a fancy name for this 21.2, so the word subtotal will suffice. Then what we want to do is subtract out our drawing account. So Spengel drawing, and the amount of the draw, if you recall, was $600. I'm going to put this in green, I'm sorry, in red. And when I subtract the 600 from the 21.2, I end up with an answer of 20,600. Give that a $sign, and now we just have to label it. This is basically our ending capital. So I'm going to write Spengel capital, except the date is April 30th. So by writing April 30th, I'm saying that's the ending capital. So this 20,600 represents the company's net worth. So we did the income statement and ended up coming up with an answer of $6,200 in net income. And then we took that $6,200, copied it into the statement of owner's equity, and ended up with a result of $20,600 as our ending capital. There is no other way to do the statement of owner's equity at this stage of the game. Okay, so you start with your beginning capital, add your net income, subtotal, subtract out your drawing, and you end up with your ending capital. In this little document, this little green document, where the numbers are, you always use 5 rows. That's it. It's always 5 rows every single time. Well, what if I don't have a drawing one month? Then I'll put a 0 in that spot. This way I'm always consistently remembering, hey, I always got to use 5 rows. The income statement, however, I can't predict to you how many rows you're going to use each time. It depends on how many revenues or expenses the company had. But the statement of owner's equity always looks the same way, 5 rows. All right, finally, the balance sheet. To do the balance sheet, remember our goal is basically the accounting equation. And if I can just go backwards just for a second, this whole document that we did here to the left was the accounting equation. Remember here in green, assets equals liabilities plus owner's equity, and our totals ended up equaling each other. So really the balance sheet is just a duplication of what we've already done without all the detail. We're not looking at how we ended up with those final answers. We're just working with the final answers only. Okay, so our goal is the accounting equation. Do assets I gotta fix this little formula that I have here. Hang on one second. There we go. Let me just change that to an equal sign. I didn't realize I typed a plus sign instead of an equal sign. So assets equals liabilities plus owner's equity. So that's what we're trying to accomplish in this document. Okay? Okay, here goes. So we're going to start off with the category assets. Remember, assets are things that you own. So look at our little orange box over to the left where all our data was. And basically cash, accounts receivable, the supplies, and the equipment would fall under the asset category. So just like the income statement, I'm going to write my headings to the left, and then I'm going to indent the names of the accounts. So I've got cash, I've got accounts receivable, I have office supplies, and I have equipment. Those are my assets. Now, should I use column 1? Absolutely. I have more than one of those assets. I have 4 of them, actually. So I'm just going to utilize column 1. I'm going to copy the numbers from my little orange box. And now I need to total them. So where do you think I'm going to be putting these totals? If you said column 2, you're right. So I'm going to add these 4 numbers together. And my answer is 20,800. I now have half of my puzzle completed. I needed to know my assets. Once I know my assets, then I can work with my liabilities and owner's equity. So now that I know my assets, I can double underline that figure to show that I'm halfway done. Let me put these in accounting mode here. And let's give the first number a $sign. And let's give the total asset number a $sign. And I should label it total assets. I have this joke that I say in class all the time: as you forget to label it, you make a total asset of yourself. Dun-dun-dun. Thank you. Thank you very much. Anyways, we have half our answer. So now let's go ahead and figure out the bottom half. So now we're going to start off with our liabilities. Some people like to label this section liabilities and owner's equity. If you want, that's great. If not, just liabilities is fine too. There's more than one way to skin a cat, as they say. And under liabilities, well, the only account we haven't used yet from the orange box is accounts payable. And a great way to spot a liability out of a crowd is that it ends with the word payable. Since I only have one, I'm not going to use column 1. Column 1 is only used when I have more than one of something. So I'm going to go to the second column and I'm going to insert that $200 that was there. Since I double underlined under the 20,800, my $sign rules start all over again. So first number in each column and final answer. Then I want to enter in my last category, which is owner's equity. And I want to enter in the answer from my green document. Okay, so let's put it in here first, Spengel Capital. And let's actually turn this entire row green so you know where it came from. Okay? So the question is, do I put the original 15,000 in this document, or do I put the 20,600 in this document? Remember, the goal is to add up to 20,800 from up above in total assets. So if you said 15,000 plus 200 does not equal 20,800, so that can't be right. If you said 20,600, you are right, because you can do that math in your head. 20,600 plus 200, that's going to balance up top with 20,800. Another reason why we want to use the ending answer is look at the date at the top of the balance sheet. It's April 30th. So everything in this document is on April 30th. This 15 down in the statement of owner's equity was the balance on April 1st. But look what's the date next to 20,600, April 30th. So we're going to enter in the 20,600, and now I want to add that to our $200. And when I do that, keep our fingers crossed. We're hoping that it equals 20,800, and dun, 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 it balances. Super exciting moment in your accounting life to get these to balance. It's a huge day when that happens, because so many times it might not work. So when it does, celebrate. So I only have one last thing to do, and that is to label this 20,800. Well, the simple answer is, what did I add to get these two? Well, I added my liabilities and my equity. So that's a great title. So total liabilities and owner's equity. Looks like I've run out of room here, so I'm just going to stretch this column a little bit. I don't know if you know Excel very well or not, but if you want to stretch a column, click on it and drag like you're playing solitaire. And that's our balance sheet. So the goal of today was to take those balances from transaction analysis and see if we can create financial statements. We created an income statement, which the result was net income. That net income answer then got copied into the statement of owner's equity. That result ended up being our net worth, 20,600, and we ended up copying that result into the balance sheet. So without the income statement, we couldn't do a statement of owner's equity. Without an income statement or statement of owner's equity, we wouldn't be able to get our balance sheet to balance. We would be out of luck. We would have put the original 15 representing capital, and you could have seen 15,000 plus 200 does not equal 20,800. So you need all of these documents to work hand in hand with each other. So you always do the income statement first, you always do the statement of owner's equity second, and you always do the balance sheet third. Okay, so that's all I have for you today. Thank you very much for your time. I hope this has helped. And next time we get together, we're probably going to be talking about debits and credits. You guys have a great day, and we will see you soon. Bye-bye.